Hello, ladies and gentlemen. Here's Lars Schall, and on behalf of Matterhorn Asset Management in Zurich, I am now connected with Nomi PRINS, the author of All the President's Bankers, and she sits now in Los Angeles. Hi, Nomi.
Hi, good morning, Lars. Or good evening for you.
Well, it's still daytime. But let us talk a little bit about one thing. Your book is now available as a paperback edition. Is there something new compared to the hardcover edition?
Well, yeah, what's new in it is revisions of the more current recent chapters, numbers like how much the banks paid in settlement fines after in the current developing, I think, financial crisis of 2008, still developing, and also a lot of corrections and sort of additions on that respect to, I shouldn't say a lot of corrections, but revisions to where corrections were needed throughout the rest of the book.
Yeah. When you mention the financial crisis, I think one feature of it is that the dollar is strong right now. What are the reasons for it?
Yeah, it's a couple things that keep the dollar up. Of course, there's the fact that the dollar in general still enjoys, even though there are, groups that are coming from other countries to perhaps try and change that, but the dollar has and still enjoys its position as the globally dominant currency. And so in the wake of a financial crisis that became a global crisis, is a global crisis, this idea of having this safe haven, this currency that is prevalent, which countries and their central banks have to own in a large quantity, as well as the fact that the U.S. government and Federal Reserve stood behind the banking system that is also dominated by the dollar in the wake of the crisis. So even though the policy, for example, of zero interest rate and all the rounds of quantitative easing created this and has created an artificially stimulated stock and bond market, the fact that it started in the United States gave the policy the sort of first mover advantage that the United States has been able to leverage into keeping the dollar strong. So logic suggests that creating more debt, that having a quantitative easing policy where you're effectively printing cash to give to the banks in order to buy back, for example, their mortgage-related assets in large quantities, that should not be good for your currency. That is a policy of desperation. However, since the U.S. was first and biggest in doing this policy, it also has had the advantage of keeping the dollar high just relative to the fact that other currencies and economies are in a weaker state. So it's not so much that the dollar should be strong on these policies, it's that it maintains its strength because there's a global adoption of these policies which has weakened other countries and currencies by more. So it's sort of the strongest of a weak bunch, but not strong because of what was done in the United States from the standpoint of policy.
Well, what is it that you're most concerned with these days when it comes to finance and geopolitics?
Well, on the financial platform, the banking system remains incredibly fraudulent and actually insolvent without these subsidization policies from the standpoint of central banks and backed by governments. The fact that we are almost 7 years into quantitative easing, even though the Fed has technically stopped, the banks have continued to buy treasury debt from the U.S. government to have the effect of quantitative easing in partnership with the Fed, means that there's something deeply wrong and flawed in the financial system, but it's been plastered over with trillions of dollars of debt and printed money. And in the wake of that, banks haven't really had to, except a couple nips and tucks here and there on some capital requirements, had to revise any of their practices. The amount of derivatives on the OTC market, effectively transparent types of collateralized loan obligations instead of collateralized debt obligations. All sorts of structures that were used into the financial crisis that began in 2007, 2008 continue to be used. They're just, instead of using subprime loans to line them, they might be using commercial loans. They might be using, shale company and natural gas company loans in the United States and so forth. So the mechanisms have not changed. The transparency hasn't gotten better. The banks haven't gotten smaller, and thus their balance sheets haven't really gotten smaller. And yet they have all this additional subsidy in the form of the printed money that has gone into the banking system to enable them to look better, to filter over into their biggest clients, so that many of the corporations, the largest multinational corporations, are subsisting on creating more debt at these cheaper interest rate levels. They are buying back their stock with the cash that they're getting from doing that, so that's propping up the stock markets around the world. So there's this whole knock-on effect of artificial stimulation of the markets without actual stimulation of the mainstream economies. And so that doesn't, to me, show a very healthy financial system picture. That's a big worry, because at the moment where these quantitative easing policies, for example, that's now going on from the ECB, the negative to zero interest rate policies that are being followed by banks that haven't yet gotten to zero yet globally, but are going in that direction, as well as the ones that are there. This is all indicative of an accident, disaster, not even an accident, it's constructed, but a disaster waiting to happen, because when that doesn't continue, when there has to be some raise in rates, or there has to be some stoppage in buying effectively covered bonds from Deutsche Bank and keeping mortgage-related assets from JP Morgan Chase, things are going to fall very quickly, because there is no real economic or financial strength there, or there's very little. We're still in a very weakened state on a foundational level. So that worries me. On a geopolitical basis, first of all, the largest governments, particularly the U.S., I think in Germany, the stronger European countries, don't seem to understand that this is a problem. So, they're focusing away from this being a problem and sort of looking at it as having been a solution, even though it's artificially stimulating markets and banks and not really helping people on the ground or small businesses or the like. So their partnerships are trading these types of policies, whereas they're not particularly looking at the true picture of what's going on, and they're sort of patting themselves on the back for finding the solution, which isn't really a solution.
Yeah. I've asked you to take a look at a video featuring Financial Times' Martin Wolf, and we will link to it, regarding a constant accommodation of China that the US has accused the UK of, after Britain decided to join the Chinese-led Asian Infrastructure Investment Bank. Is the special relationship between the US and Great Britain not at its best stage?
I think one of the things that any intelligent government in the world should have realized after this financial crisis is that if you have a political system that supports an over-leveraged and criminal financial system, which creates worldwide economic havoc, that's not necessarily going to be your best partner as your only partner going forward. So what the UK has realized is that it needs to sort of hedge itself, as an asset manager would hedge themselves in different partnerships that can allow it to grow economically away from the US. There'll always be the relationship there, but the prudent thing to do from an economic and political standpoint is to forge alliances with other countries. That's what the U.S. tried to do away from China for decades, right? So this is something that the U.K. is realizing, that they have a trade partnership with China. China's trying to assert itself as more of a financial player in the world. It certainly has a large population, a strong economy, and it also has a less leveraged banking system than the United States has. And so one could argue, even if its growth stops or slows down, it still has a strong foundation to be a good partner. And so I think the UK is going to try and it's going to continue to support its relationship with the United States, but because it has to. That's how our world is currently structured. But I think it's smartly also trying to open itself to the sort of Asian emergence, and particularly led by China.
Yeah, but talking about a special relationship, what would you like to point out between about the relationship between Wall Street and the City of London?
Well, Wall Street relationship with London goes back, of course, at least over a century and a half. I mean, the money that came into the Civil War and taking sides back in the United States in the second half of the 1800s was a lot of relationships between the City of London and what was emerging as a Wall Street powerhouse through the Morgan interests and so forth, or even before that. So there's certainly been a long-term history, and also from a financial standpoint, in the 70s in particular, the Eurodollar market that started to spawn and grow from a lending perspective and a trading perspective in London was a place where U.S. banks could take advantage of less regulations than they had to deal with in the United States. So there was also a sort of more recent, or at least in the last half century, recent necessity to work with London. And a lot of banks, particularly all of the old ones, have had either merchant banking operations in London to circumvent regulations that had existed at the time, trading operations, and now, of course, they have full-fledged investment banking, commercial banking, and any kind of operation that can exist as a result of global deregulation of the Glass-Steagall Act in 1999, and also a similar act in the UK a few years before that. So there is going to continue, again, this is going to continue. There's plenty of bankers who I was one of them, going from the Wall Street area to work in London and back. I mean, it's considered, a very glorious part of a banking career, as well as it is to go the other side, but usually it's more interesting to go to London from New York than the other way around, I think. But that's what's going on now, and that continues. And of course, a lot of the London branches of U.S. banks can do more internationally than U.S. banks can potentially do, for example, during sanction periods. You can have a subsidiary in London have activities with a sanctioned country, perhaps, that you can't do out of your New York office. So that's kind of another part of that relationship that exists.
Would you say Great Britain depends too much on the financial sector?
I think any country depends too much on the financial sector, whether they have a large one or not. And the UK, Great Britain, and particularly because of the city, because of London and its unique position as not just a banking sector, but a trading sector and a clearance sector, an exchange sector, all those elements of the financial system, a derivative sector, is particularly dependent on the money that is made, but also at risk from the practices that are used.
Now, with respect to China and the Asian Infrastructure Investment Bank, I want to ask you generally about China's activities. Here are some points. The new Silk Road infrastructure project in Central Asia, the internalization of the yuan. For example, there is now a trading hub for the yuan in Canada, and of course there is a trading hub for the yuan in the City of London. Then the Chinese negotiations with the IMF, the gold purchases of China, which are huge, the closer ties to Russia, and so on. What's your comment on those developments?
Well, first of all, China took a different tack from the United States when it was creating a phenomenal amount of debt from the Federal Reserve perspective, not just in this financial crisis, which was massive, but even before that and the years up to it as a part of just policy, which was not having that kind, which was basically collecting assets and therefore having the sort of cash to spend on whether it's supporting their currency or infrastructure projects or what have you, and even with internal political issues that might be connected to those types of endeavors. So the fact that they really came out of, or really didn't enter the financial crisis to the extent that the U.S. and Europe did because of their very over-leveraged and central bank and government-supported big banking centers, they didn't really have the same type of exposure. So now they're turning around and saying, look, we have a strong currency, we have cash, we have an economy that is fairly robust, whether or not it has some weak points along the way relative to other countries. And we've seen the results of these sort of very financially liberal policies that can create economic destruction and can weaken countries. So we want to have our own independence from that. So part of having their currency be traded in various countries outside and creating exchanges and trade partnerships and a development bank and so forth is a way of saying, look, we want to have, and we have the right to have, and we have the position to have more power, because at the end it's also about power in terms of what happens to our country and in terms of where development in our country with our partners is done and how it's paid for without having to be fully attached to U.S. policy or European policy, because it's better for us. I mean, this also comes down to it creates power, particularly because of the decisions that had been made into the financial crisis. So I think to a large extent that was a big boon for China to sort of step back and say these policies didn't really work. And I think China knows that even with the plastering over that has happened with the various subsidies and ZERP policies and QE and all of that, that there's still a lot of fragility in the Western financial and economic sectors. And so I think they are like, we are going to try and gain some independence from that.
And with respect to Russia, what can Russia do in order to, let's say, counter the actions of the West?
Well, what Russia's doing is trying to have these partnerships, as China is, outside of the West. And I think ultimately to, even with the sanctions that are led by the U.S. currently, I think ultimately to have more relationships with Europe. I think they've indicated that, aside from being sanctioned, that the U.S. has sanctioned Russia in many ways throughout the years, off and on, and therefore they're not a particularly stable partner country. I mean, even if there weren't sanctions. And so I think that Russia's aware of that. I actually was at a conference last week in New York where the ambassador from Russia was talking about their necessity to forge stronger relationships with other countries that they deemed to be more stable. And that wasn't to say they weren't welcoming U.S. business in Russia and vice versa, just that they had to, because of the political situation and the sanctions of this administration, they have to find alternatives. And so I think that is what they're actively seeking. They have a very robust technology sector that's kind of growing, and they're looking at expanding that internationally and so forth. So looking to have their independence as well. I don't think that, I don't think that sanctions are going to go away this administration. And they need to, as a country, find ways to fortify their own superpower status and their economy and their trading partnerships.
The last question that I would have, what are your thoughts on the free trade zones that the US is negotiating in the Asia Pacific and in Europe?
Well, the interesting thing today is that the world is in play. right? I mean, you have, as we've been talking about, the U.S. that has been a long-term superpower, having grown out of World War II and created and basically run the World Bank and IMF and so forth as the senior partner and the senior power holder. And then now you have this shift into China's emerging, what Russia can do, and all these sort of external partnerships, Latin America and so forth. And so there's a little bit of a shift going on, and what the U.S. is trying to do is step up above that shift. So on the one hand, you have, say, Russia-China partnership strengthening, and on the other hand, you have the U.S. saying, well, what else can we do to strengthen our global footprint, or at least to keep it? And so that's where the loans come in. So this idea that we're going to sort of have more partnerships and continue our supremacy throughout the world, our currency and so forth, particularly in combat way to what's happening around us. So it's really all a way of maintaining that sort of political and financial power, which is, continued to be an MO of the United States, particularly in the wake of World War II. So basically in all the years since.
Thank you very much for this interview.
Thank you.
Always a pleasure.